Hi community and welcome to DEX Tools Academy. In our YouTube channel we will show you everything you need to know to invest in cryptocurrencies and crypto tokens. In this video I'm going to explain you how you should start out when you're new to crypto and the important things you should know so that you don't lose your money investing in the wrong tokens. The crypto world in general is a new type of finance. We also call it Finance 2.0 as it is advanced technology in comparison to the old financial world where we need banks to realize transactions, to pay for goods and services and for just holding our savings. Therefore, we must trust them and play within their rules. You want to send your money to another account, you need the bank to accept this transfer. If they don't accept it, you just can't send it. A few years ago, we have seen this a lot when we tried to send money to Coinbase, a crypto on-ramp to exchange traditional money for crypto. Some banks just rejected sending money to Coinbase, made the transactions fail and send it back to the bank account. They just didn't allow to send your own money to a crypto exchange. Crypto allows us to take our own custody of our hard-earned money and manage our funds ourselves. We have all the freedom to send our money within seconds around the whole world. The blockchain, where all transactions in the crypto world take place, is conceptualized for verifying transactions automatically without needing anyone in between. This is what we call trustless. There are many blockchains in existence like Bitcoin, Ethereum, Polygon, Binance Smart Chain, and many more. All blockchains have its reasons to exist by being cheaper, faster, more secure, more scalable than their competitor. In our DEX Tools Academy YouTube channel, we have published a bunch of videos for you to educate yourself. I will guide you now through these videos so that you're ready to dive into this new and exciting space of revolutionary technology. Before we start, let me remind you to like that video, subscribe to our YouTube channel and hit the bell button and all that you don't miss out on upcoming videos from our DEX Tools Academy. When trading crypto, there are two different ways to do so. You can either choose to trade centralized, that means through a centralized crypto exchange which is controlled by a third party who has the custody of your tokens, or you can trade decentralized on a decentralized exchange which is not controlled by anyone. When trading decentralized, you need to have your own wallet holding your private keys, or also called seed phrase, yourself and not by a custodian. And to make a trade, you just connect your private wallet with the decentralized exchange and you can swap your tokens via smart contract, which is a trustless technology executing the swap. For diving deeper into the topic of centralization and decentralization, I recommend you to watch our video where we explain the different advantages and disadvantages. Trading crypto tokens means you are swapping the currency you hold, for example USDC, into another currency, let's say the crypto coin ETH. By the way, USDC is a so-called stablecoin. Stablecoins are crypto tokens pegged one-to-one to the value of a traditional currency. In the case of USDC, it is the US dollar. That means 1 USDC is equal to 1 US dollar. Stablecoins have been formed to bring stability to the prices of cryptocurrency as the value of crypto tokens can be very volatile. There are different kinds of stablecoins. If you're interested in learning more about any of the topics I mentioned, you'll find the links to the appropriate videos in the description. So, swapping a crypto token works like this. When you realize the swap from USDC into ETH, your USDC turns into ETH. That means you will receive the same dollar amount of the USDC you swapped into ETH. That means if Ethereum has a value of $3,000 and you swap 1,000 USDC, you will get an amount of 0.33 Ethereum, which has a value of 1,000 US dollar. Take into account that every swap comes with a fee. Fees can vary a lot, like from not even 1 cent to thousands of dollars for a swap, depending on which blockchain or exchange you are actually trading on and on the usage of this blockchain. We have covered this in a video explaining blockchain scaling and blockchain layers, which is more of a video for advanced crypto traders. When you're ready, please check this video out. Now the question is, where can I change my traditional fiat money into crypto tokens? So there are on-ramps and off-ramps. Most people onboard into crypto through online exchanges. Not all exchanges, however, allow for direct fiat purchases. Thus, when you receive crypto coins in exchange for fiat money, you are using an on-ramp. When you spend cryptocurrency for something that is not a digital asset, for example, you swap your ETH back into US dollars, you are using an off-ramp. Understanding this, you are now ready to choose the on-ramp which fits best for you. Most people onboard into crypto just using centralized exchanges. These are online services you can use for swapping your coins, such as Binance, Coinbase, Bitpanda, mostly used by German speakers, or other exchanges. Exchanges like these are the easiest way to start buying crypto tokens securely. Talking about security, when you open up a new account on an exchange, make sure you set up your 2FA authenticator key. Your account will be a lot more safe then. When you choose to purchase your coins through a bank or a payment service, such as PayPal, make sure you actually can send your crypto out to your own wallet. In crypto, there's a saying, not your keys, not your coins, which means if you're not holding the private keys of your own wallet, the coins are not yours as they belong to your custodian and you need to trust them. Coins you're holding in PayPal or the Revolut fintech bank accounts are not possible to send out. So better use an online crypto exchange if you want to make transactions, trade, earn yield by staking your coins and explore the real crypto world. Once you bought your tokens and hold them, you can decide whether to keep them on the exchange, to trade them, or to send them into another wallet. For sending coins, you need to click on the send or withdraw button, choose the coins you want to send, and then you will be asked for the receiver's wallet address. This is the public key. Please don't confuse it with your private key. This one needs to be kept very safe. Then you need to choose the network you want to send the coins to. For receiving coins on the Ethereum chain, you will need to choose the Ethereum network, sending ERC20 tokens. For receiving tokens on the Binance Smart Chain, you will need to send BEP20 tokens via Binance Smart Chain network. You can choose Polygon for sending to the Polygon, or also called Matic network. Same procedure with all other chains. It's very, very important that you are using the correct network. If you just look for the cheapest fees and choose the wrong network, your coins can get lost forever. So please be careful with that. I talked so much about wallets, public keys, private keys, seed phrases, but what is it all about? Well, as I said before, there are different types of crypto wallets you can use for storing your coins. You can choose whether you hold your coins on an exchange or you can choose to store them securely in your own wallet. It's always recommended to store the coins in your own wallet where you hold the private keys yourself. Exchanges could be hacked or could change rules from one day to another. For example, if a government would choose to restrict crypto-related activities in their country, the exchange would need to adapt to it and users' funds could be frozen until further actions. This generally can't happen if you're holding your coins in your own wallet. Centralized cryptocurrencies can still be frozen in your own wallet, but this is another topic rather covered in a video about stablecoins. Once you decide to send your coins to an own wallet, the question arises which wallet to choose. There are many crypto wallets you can use to store your coins safely. Also, different blockchains use different wallets. The most common one is the MetaMask wallet. MetaMask supports most blockchains and you can install it in your web browser as a browser extension. We made an own video about MetaMask, so if you want to know how to set it up, add various RPCs and finally use it, feel free to watch the video linked in the description. Something which is absolutely essential and significant when you are into crypto is being extremely careful and always watch out for scams. There are so many different ways where you can get scammed and you can lose all your money. So it's important to research every crypto token, not talking about those meme coins which are only being traded for fun, has an actual project behind it, like for example DexTools.io with its Dex token. The token is used for accessing different versions of the platform or also for access to pre-sales and therefore provides value for its holders. So there's always a reason to buy a token. Getting rich is not a reason at all, and if you don't research coins you buy beforehand, you will most likely be scammed in form of not being able to sell tokens because the creator of the token restricts you from selling, or any other trick token owners apply to steal your money. Not only in trading you can get scammed, but also on social media. Scammers are waiting for uneducated people to steal their money, for example via private messages on Telegram or posting random links to connect wallets. We have made a very complete video about common crypto scams. Please watch and also share it with your friends. You will save a lot of money and you can trade much more successful and relaxed. One thing I want to explain you, especially for those looking for cheap coins to buy that have a big upwards potential to make you rich as fast as possible, 4,000% gains in a day, well, no, now seriously. The price of a coin is not what matters at all. On dextools.io you see all the data of crypto tokens being traded on decentralized exchanges. So just take a look at the market cap and the token supply. These are actually the metrics that matters most. Let's assume fundamentals would be the same for all tokens and on the market, and watching only numbers, we can say the lower the market cap, the higher the upwards potential of the token. So the market cap is the market value of the total of all tokens the project has in existence. So market capitalization is equal to the coin price multiplied by the number of coins outstanding, the circulating supply. The fully diluted market cap is equal to the price multiplied by the fully diluted token supply. The price is completely irrelevant because let's look at two different tokens. A huge supply of tokens, which has an extremely low token price, and another coin with low supply of tokens and has a high price, can both have exactly the same market cap. So don't choose your tokens by their token price because it sounds cheap. Not every token can go to $1. I hope you are now clear about how to start in crypto, and congratulations, you learned the most important things to watch out for. If you have further questions, feel free to join our DexTools community Telegram or Discord channel, and the admins there are happy to help you out with all your trading questions. See you on the next one. Bye!